the time out to attend the second edition of Leading Conversations with FBNQuest. The theme of this session is being ethical with your investments. We intend to provide you with investment options that improve financial inclusion and align with ethical beliefs. I'd like to give you a brief background about the webinar series. While I wait for other attendees to join, I'd like to give a brief background about the Leading Conversations with FBNQuest. Leading Conversations with FBNQuest is a webinar series created to bring you markets, industry, and consumer insights and analysis that are crucial for individual and corporate success. The series will feature the leading professionals of FBNQuest, as well as other industry experts with experience in corporate and private investment management, wealth preservation, financial advisory, and other areas of interest. We hope to open your mind to a world of opportunities through the session, and we very much look forward to engaging with you.
Leading Conversation, being ethical with your investment.
The session will run for an hour, and the speakers are Malam Atario Machido. He is a director at Burak Capital Limited, and Tutu Owolabi Kadiku. She is a CFA and CAIA holder, a Vice President, Multi-Currency Fixed Income Senior Portfolio Manager at FBNQuest. I'll introduce the speakers so that you can understand that they have a wealth of knowledge on this topic. Malam Atario Machido is a trader and consultant on Islamic banking and finance, with specialty in Islamic capital markets. He is a director of Burak Capital Limited, a financial advisory firm that was involved in advising the federal government of Nigeria on its 2 sovereign sukuk issuances to date. He continues to leave his footprint in the Islamic finance industry in Nigeria. Malam Atario was instrumental in structuring first Nigerian private sukuk. He is a member of the technical committee constituted by Steering Committee on Alternative Finance, made up of CBN, SEC, GMO, ICRC, and FMG. He is also a member of 10-year master plan on alternative products of SEC. Malam Atario Machido is a fellow of the Institute of Chartered Economists of Nigeria. He is a fellow of the Chartered Institute of Management and Leadership, Delaware, USA, and a fellow of the Institute of Islamic Finance Professionals of Nigeria. Tutu is a member of the Fixed Income Portfolio Management team at FBNQuest. She is a Chartered Alternative Investment Analyst, a Chartered Financial Analyst, an active member of the CFA Nigeria Society, and she holds the CFA Institute certificates in investments. She is also knowledgeable in areas of Islamic finance and holds a certified Islamic finance executive qualification. Tutu has extensive expertise in fixed income trading with key competencies in asset and liability management, portfolio construction, and management. Please note that we'll be having the question and answer session at the end of the program. So please send your questions via the chat room so we can answer any of your questions that you have. I'll be handing over to Malam Atario Machido now. He'll be discussing and analyzing the evolution, principle, and benefit of Islamic finance. Please remember, you can send in your questions via the chat room. Malam Atario, good afternoon, sir. I'll be handing over to you, sir. Thank you.
Thank you so much, Ayo, and good afternoon, everybody. May I please share my screen? Be permitted to share my screen? Thank you so much once again, Ayo, to another host of this webinar. أعوذ بالله السميع العليم من الشيطان الرجيم بسم الله الرحمن الرحيم وصلى الله على نبينا محمد وعلى آله وصحبه وذريته وسلم تسليما كثيرا أما بعد السلام عليكم ورحمة الله تعالى وبركاته. Our area of discussions today on the leading conversation with FBNQuest is being ethical with your investment. And we know that globally now, things are changing to socially responsible investment activities because of our respective values. So we're going to dwell more into it that is really related to non-interest financing, and we'll know based on our respective area of issues that we want to discuss. First, to understand the ethical versus non-interest finance. They are already related, only that non-interest finance is broader because it comprises other things. And globally, as I said, ethical investment are equated to socially responsible investing, which is SRI that is globally being recognized. An investment management approach which integrates environmental, social, and governance criteria in traditional financial analysis that we know that environment and social as well as governance must be incorporated into the traditional financial analysis that we know. An ethical investment screen out investment universe with any business that is harmful to the environment, such as weapon of mass destruction, social, such as terrorism, injustice, tobacco and intoxicants that are usually interrupting the social activities of the society, and the governance issue, such as issue to do with corruption and bribery. As long as it is ethical investment, as long as it is Islamic finance, all these things are prohibited to be dwelled into in terms of the investment or to deal with as a trading activities. The principle of non-interest finance apply ethical and extra financial criteria in financial services in both deposit generation and investment and financing activities related to it. And non-interest finance is a financial system that operates according to Islamic rules, principles, and code of practices, which is called Sharia and is therefore Sharia compliant in nature. And that is why it is being called Sharia compliant. The purpose of Islamic non-interest finance is to improve living conditions and well-being, establish social equity, and prevent injustice in trade and business relationships. And that is naturally the issue of non-interest finance. The non-interest finance is an ethical underpinning that puts stewardship and societal values creation at the forefront of finances and trading that we know. And as a result of that, certain Islamic prohibitions can be seen as consistent with the negative screen approach under ethical, socially responsible investing, and therefore non-interest finance feature institutions and instruments such as banks, capital market, fund managers, investment firm, and takaful, which is insurance companies. They are all players and institutions and instrument related to the non-interest finance, just like a conventional finance. And both fund generation, as I said, deposit and utilization, that is asset creation, must follow the Islamic finance principles strictly for it to be Sharia compliant. And as a result of that, some activities, some products or risk or reward are either prohibited if they are clearly prohibited in the religious books, or promoted if they are actually free to be traded in or to be dealt in. According to IFSB, Islamic Financial Service Board Stability Report of 2019, the total global asset under management of non-interest finance was 2.19 trillion as at second quarter of 2018. And to convert it to Naira, that is 985 trillion. And of course, to look at it vis-a-vis the federal government of Nigerian revised budget of 2020, that will take about 90 times. So meaning 90 years of similar budget if it is going to be maintained as it is. So it's really a huge market, and that Nigeria shouldn't be left away aside. Rather, it's better to always be part of it. What is the impact of non-interest finance? One, we know that it is naturally developmental in nature because it is asset-related activities. As long as you are going to do Islamic finance, there must be an asset, either to be created or it is already related to be traded and other things. So naturally, it is developmental in nature. Infrastructure financing and acquisition of assets is one. Direct relationship with real sector, hence increased growth and development, as I mentioned. It attracts foreign direct investment because there are a lot of liquidity outside the country that is looking for positive GDP country that are having similar instruments in order to come and invest. Creation of employment and reduction of poverty, because there must be an asset, either project to be developed, it creates employment, and of course, it reduces the poverty. And it promotes ethical living and social justice. Because if you are going to do Islamic finance, you are not expected to finance any business related to things that are harmful to the society, or likewise, it is also naturally trade facilitated model. Therefore, it's trade facilitation. And financial inclusion, we know that globally, every country is struggling to see how they can include those that are outside the financial cycle. And therefore, Islamic finance, especially in Nigeria, in the northern region, will definitely play a major role in financial inclusion for those people that are not, to come back and said, this is based on your values, you can come and participate into the financial activities of the economy. And of course, there are instruments such as Sukuk and Islamic funds, and there are alternative sources of funding. Even though you are a conventional player, you can still issue Sukuk and also get your alternative sources of funding. It is also investment instruments to even bond investors. Record has shown that over 60% of the global investors in Sukuk, wherever Sukuk is being issued, not only in Nigeria, are being purchased and invested by bond investors that are usually interest-based bond investors. And it is high in demand because its value at risk is very, very low because there is an asset. So since asset is there, you can always go back to that asset. So value at risk related to Islamic finance, which is Sukuk and iFund, is very low. And that is why conventional bond investors are rushing to see that, since there is also all the necessary risk mitigating activities, plus the availability of the asset in the structure. It is also liquidity management instrument to conventional investors, as I mentioned, conventional financial institutions, but specifically to non-interest financial institutions. Because if you have your money at the moment and you put it into a conventional bank, the bank will immediately take it and buy a liquidity management instrument that is available in the conventional financial sector, such as treasury bills. But non-interest financial institutions such as Islamic banks, they don't have that liberty immediately to be moving the money like that. Likewise, it is also liquidity management instrument to Central Bank of Nigeria because they do collect deposit and other funding from non-interest financial institutions under their purview, and therefore they are looking avenues where they can invest these funds. Nigerian Deposit Insurance Corporations as well do collect the premium from banks, non-interest banks specifically, and they are keeping this money just idle unless they were able to get liquidity management instrument that is Sharia compliant. Pension fund administrators is also one big sector that is looking for liquidity management instrument, because in February 2019 specifically, PENCOM released their revised guidelines, and they made all the pension fund administrators in the country to have a multi-fund structure, where one of the multi-funds is Fund 6, and that Fund 6 is non-interest funds, which is strictly Sharia compliant fund. In that fund, it is expected that PFAs must invest in all the instruments that are Sharia compliant. Therefore, they are looking for instruments that are Sharia compliant for them to invest, as well as manage their liquidity instruments. Now, what are the evolutions of non-interest finance? Of course, this is something you can read virtually in the literature, but interest loans was order of the day during 550 years after death, that is before the advent of Islam. And after the emergence of Islam and prohibition of riba started to come, that is interest. And then Mudaraba Salam transactions erupted and started to be practiced during that era. And trade spread over Rome and Spain because of the trade relationship between the countries and the movement of the caravans. And financial instruments such as sak, which is the plural of sukuk, which is the singular of sukuk being the plural, were also being used and practiced during that era from one area to another, where a particular instrument such as a receipt can be provided, and the beneficiary of that instrument can go to another country based on the people that are playing in the same industry or in the same area, can also cash it out and do whatever it is, which basically based on historical event, that SAC metamorphosed into what we know today as check. And that is the singular of sukuk. From 18, then of course, issues to do with attack to the caravans that are moving from the Muslim countries to Europe and other places, where made the industry to go into hibernation until 1800, when the Suez Canal project was started and Barclay Bank started to be established in Cairo. Then people started criticizing the bank interests that spread from Cairo to Middle East. And then two-tiers Mudaraba model was introduced in order to provide options and alternative to that people that are interested in such kind of instrument by Montgomery from 1963 to 1967. And of course, 1970 to 1990 that we know, that was when the oil boom increased, and therefore non-interest finance also increased because of the Middle East, of the oil boom in the Middle East. And that was when the Dubai Islamic Bank and Islamic Development Bank and Bahrain Islamic Bank were all introduced within that range. And of course, because of the interest globally, IMF started to publish working papers on Islamic banking and finance. And then there we have the establishment of IOFI, which is Accounting and Auditing Organization of Islamic Financial Institutions, that is based in Bahrain, which is a standard setter of all the Islamic banking and finance that we know at least today. And it's being recognized by many countries and by many financial institutions globally. Then the Dow Jones Index and FTSE Index also came and construct their index in line with the Sharia. Of course, from 2000 to date, we know that there are a lot of sovereign sukuk that has been issued or that have been issued within that period. An establishment of IFSB, Islamic Financial Services Board in Malaysia, which is also another standard setting body that is based in Malaysia and other institutions. UK extend tax neutrality to Islamic finance products because there are some contracts in Islamic finance that usually will have two transactions in one. And as a result of that, if natural tax is going to be taxed to each transaction, is going to be too expensive for the final, for the consumer. As a result of that, tax neutrality was provided by UK in order to provide the level playing ground between the conventional financing and the Islamic financing. And of course, many sovereign issuance, especially those that have minority Muslim issued sovereign sukuk. We have Hong Kong, for instance, Luxembourg, UK, South Africa, they all issued sukuk in 2004, and it made a lot of record in 2004 and made of a lot of headlines in the papers and news globally. Senegal, Nigeria, of course, we have to mention Nigeria that so far we have about 4 public sukuk issuance. First, the Ocean sukuk in 2013, October, and then the Nigerian 3 sukuk of 2017, 2018, and recently 2020. Now, the non-interest finance prohibition, which is basic and the backbone of the Islamic finance, whenever you are going to structure any product, you have to make sure that you avoid these particular prohibitions. And these provisions are interest that we know, which is riba, and also excessive uncertainty, which is garal, or at least contractual uncertainty. We also have to look at prohibition of gambling, which is maisir, and prohibition of dealing in unlawful products and services that are specifically mentioned in the religious books, and prohibition of unfairness, injustice, and unethical practices generally. Now, to look at riba first, riba, which is interest, technically means increase taken as a premium from the debtor in a debt or on account of delay of payment or increase on account of exchange of money of the same kind or exchange of certain fungible items that are on the same kind. And meaning simple interest or compound interest are both prohibited. And it is also in the Quran as well as in the other Abrahamic religions such as Judaism and Christianity. We have all the necessary reference to check in there. Uncertainties, which is garar, is also prohibited. And garar means, we usually in the industry call it you said, by Professor Sheikh Ziad. He mentioned this you said, and it is very easy for you to understand the garar. Any transactions that you are going to dwell into, and you found that there is uncertainty that is excessive, or there is speculations in it, or there is ambiguity information, or there is ambiguity, or there is information asymmetric that is tilted to only one side of the transaction, the other partner doesn't know about that information, or there is deception, meaning you said, that leads to exploitation of any of the parties to a transactions. Therefore, it will have a potential for dispute, and that is forbidden for you to go into such kind of transactions. We also look at the gambling, which means activities involving betting, such as gambling or games of chance, where a party gains at the expense of the other party, which also have high tendency of dispute, which can erupt between the parties, especially the loser. And also we have other activities such as pork, which both in the Quran and the Leviticus has also prohibited. We also have alcohol, which is intoxicant, clearly spelled out by Quran 590, and Corinthian also. We also have pornography, which is also specifically mentioned in the Quran as well as Matthew 5:28, and injustice, specifically also mentioned by Quran and Exodus 23:1-3. Meaning all these prohibitions, if you look at them, it's not only from Islam, but rather from all the Abrahamic religion. So it all goes together with all the other Abrahamic religions. So Islamic finance is not only for Muslim, it's just the name and the nomenclature that is Islamic finance, but it's supposed to cut across all the religions, because no religion actually will tolerate the immorality and some injustice in the society, which is promoted by Islamic finance. Now, the basic difference that we can see between non-interest and conventional finance is usually conventional finance product where a customer approach a bank and request for a financing of a particular asset. But the bank, because of what they do, they give the money to the customer after doing all their due diligence and found the client to be actually credit worthiness. And then when the client is going to be paying, he'll be paid the entire principal plus the profit margin that is agreed. And that is the cash and cash, which is clearly an interest based on the definition I gave earlier. But of course, there is also this which Allah permitted trading and prohibited riba, meaning وَأَحْلَ اللَّهُ الْبَيْءُ وَحَرَمَ الرِّبَى. Allah has permitted trading and prohibited riba. So what we've just seen in the conventional financing is just riba issue. But because trading is permitted, therefore we have to smuggle trading into the banking activities. So here we have the Islamic side of it, where the customer approached a bank and said, I want a car. Because the bank cannot give money directly to the customer, then the bank must go to the vendor after doing all the due diligence and buy the car and take all the necessary risk related to that car. Whatever will happen to that car at that stage will be borne by the bank itself. So then bank will come and do into this transaction with the customer and give the customer this particular car in line with the contract that is agreed, either through lease contract or through sales contract. Then the bank, the customer will be paying the agreed rentals or agreed considerations to the bank, meaning this one is trading, not actually cash to cash, rather is asset to cash. But looking at that, what are the other non-interest financial products that we can see at the moment? This is the master slides for some of the classical contracts that we can see in the Islamic finance generally. We have equity, which is partnership, such as the partnership that we know in conventional with difference actually. We have sales contract, we have lease contract, and we have agency contract. Because of the time factor, I'm going to dwell only on Mudaraba, which is the partnership, and then the Ijara to see. What is Mudaraba? Mudaraba is a profit sharing and loss bearing, meaning there will be two parties that will go into a Mudaraba as a partnership in business, whereby one party provide capital and the other party provide labor. It is expected that pre-agreed profit sharing ratio at the beginning of the contract must be agreed, and the business will help. If there is profit, then profit will be shared according to the agreed profit sharing ratio in the contract. But it's loss bearing because if there is any loss, it will be borne by the financier. So only the provider of capital will suffer the loss. A Mudari is liable for capital on negligence or breach of contracts, meaning if there is any breach of contract that the Mudari is found to be negligible or breach of contracts, will be liable to any capital. Give you example, somebody, two partners, one provided the vehicle, one provided the taxi, for instance, and decided to be restrictive Mudaraba, where the driver who is going to manage the venture is forbidden, is not allowed to go outside a particular environment. But because of some issues or because of a passenger he decided to rush outside the parameter fence that was agreed between the Mudari and the Rabuma. If anything happens to that taxi outside that, then the Mudari would be liable for such because there is negligence and breach of contract. It is similar to silent partnership in common law. Now, just to give you a practical example, for instance, there will be a fund manager such as or a manager such as FBNQuest Asset Management to manage the venture, and there will be investors such as the unit trust holders, for instance, that can invest into the mutual fund or any other deposit related to FBNQuest products. Now, we identify that there will be FBN Halal Fund as a management, as a product that investors may be interested, while FBNQuest will manage because they are professional in such kind of management. Now, based on all that, Mudaraba agreement will be executed because it is going to be collective investment scheme, a mutual fund. It must be filed with the Securities and Exchange Commission so that all the necessary approval will be provided at this stage. So if I say Mudaraba agreement, I'm not referring to only Mudaraba agreement, but all other documents that are needed by the regulations to be reviewed by Securities and Exchange Commission here in Nigeria, for instance. Therefore, all the documents will be provided, and if approval is given by the Securities and Exchange Commission, then the subscription will be provided, and the investors that are investing in such fund will provide their subscription and put into the halal fund. Then FBN manages the venture, and a period down the line, 6 months, 1 year down the line, profit is declared. From that profit, then according to what they have in the Mudaraba agreement, a particular profit share will go to the investors and a particular share will go to the fund manager in line with the profit sharing that is agreed. But it is very well known to understand that this is a principle of this particular Mudaraba. If there is loss, as from the definition I provided, then the loss will be borne by the investors. This is similar to the Musharaka which means also partnership where all the partners will provide the funds, the capital into the venture, and then if there is profit, it will be shared according to the pre-agreed profit sharing ratio. But if there is loss, then it will follow the proportionate share of each shareholder, of each partner according to the capital contribution. That is the major difference between Mudaraba and the Musharaka. Now, as I said, because of the time factor, I'm jumping to Ijara, because here we have a place where you can provide the fund, but what will FBNQuest do with this particular fund if they are given in order to manage? There are other contracts they can go into. They can go into leasing, for instance. They can go into sales such as Musharaka, such as Murabaha. They can go into Musharaka, which is partnership that I mentioned to you. They can go into Sala, which is a forward sales contract, or Istisna, which is also a forward sales contract in relation to the construction. But just to mention only one, which is Ijara, meaning lease. Ijara is the transfer of the use of rock or benefits of a particular property or asset to another party in exchange for a pre-agreed rental for an agreed period. Naturally, in Islamic finance, Ijara is an operating lease where the asset belongs to the lessor until the end of the transaction. Assets for Ijara leasing include tangible or intangible assets. It can also be existing assets that you can see immediately or non-existent that will be provided in future from the Ijara Mausufa fil Dhimma, that is the forward lease contract, which we all know of the federal government of Nigeria, the assets which are routes are not readily available but will be available in due course, and that is non-existent. But fully describable and also services such as educational, such as airtime, in the telecom industry, we know, such as healthcare services can also be used for the Ijara, and that is why we have service Ijara in the Islamic banking sector. It is transferring use of assets, not transferring the ownership, meaning it is the only use of the asset that will be transferred to the lessee. The legal ownership of the asset will remain with the lessor. Lease assets should be valuable, identifiable, and quantifiable. And therefore, consumables that we know you can consume and they will never be seen again or be utilized again cannot be leased out according to the principle of Ijara. And the lessor may transfer the asset at the end of the transactions, that is the ownership to the lessee at the end of the contract, either via a gift if the entire asset from the rentals has already been paid completely, plus the profit margin the financier is expecting or the lessor is expecting. Therefore, the value of that particular asset will become abstract, and therefore it is scrap. Therefore, it can be gifted out, but in separate contract, or final rental payment, or at a nominal value at the end of that particular transactions. And of course, rentals can be fixed rate, meaning you already know exactly how much you can, and that is why FBNQuest Asset Management can say fixed rate, because if they provided Ijara for vehicles, for instance, they know they've already fixed the rate and they can give the investors of the mutual fund also the fixed rate. It can also be floating, but it has to be periodic specific, meaning if it is going to be floating, you can target for a 6-monthly rate changes you can do. Just to give a vivid explanation on the structure, for instance, here we have a customer who approached FBNQuest Asset Management for a financing of a vehicle, and he identified this vehicle from a vendor that he has identified, and therefore FBNQuest will do all their due diligence and credit worthy analysis to find out the client is worthy to be financed, to get that car financed. And therefore, the purchase undertaking will be, the necessary undertakings will be executed between the FBNQuest and the client. And then based on the undertakings, the FBNQuest Asset Management will go to the vendor identified by the client and a particular vehicle identified by the client and pay the vendor at spot payment. And that is the spot transactions that we have, and take delivery of this particular vehicle that is identified. Now, the asset at this stage belongs to the FBNQuest Asset Management, and therefore they lease this particular asset to the client according to the client's need, and the client will be paying rentals, periodic rentals, until a period down the line, maybe 5 years or so, when FBNQuest realized that all the money it has put into a spot payment to the vendor, plus what it's earmarked as the profit it wants to get from that for that particular 5 years have been already paid, then at that stage, it becomes a scrapped value and it can do the one of the transfer that I mentioned earlier. Now, because it is an ijara and it is also the same instrument that FBNQuest Asset Management Halal Fund is going to invest in, Federal Government of Nigeria Ijara is one of their instruments. So I feel I need to also explain to you Federal Government of Nigeria Sukuk, especially that I was part and parcel of the structuring of it. Federal Government of Nigeria came, as I mentioned, in 2017, 2018, and of course, recently in 2020 to raise Sukuk. The first one was 100 billion, and the success rate was about 104 billion. 4 billion has to be returned to the investors and absorb only 100 billion. The second one was also 100 billion as the second test, and about 134 billion was subscribed, and therefore the oversubscription portion must be returned again to the investors and only absorb only 100 billion. Now, in this recent one, because of the appetite in the industry, the Debt Management Office decided to raise the bar from 100 billion to 150 billion. And of course, surprisingly, even though there are a lot of challenges of lockdown, COVID-19 and other things, but yet the subscription size was over 669 billion, over 440% subscription. And at the rate of 11.2% per payable semi-annually per annum, and minimum subscription was just 10,000 and in a multiple of 1,000, and the tenure is 7 years. Payment is bullet sum at maturity, meaning whatever the SPV that I will explain to you construct in form of the roads that SPV is going to build and lease to the Federal Government of Nigeria. In 7 years' time, Federal Government of Nigeria is going to buy it and pay the bullet sum at that maturity and pay the entire principal based on the people's subscription at the end of 7 years. The use of the proceeds is construction of roads and rehabilitation of identified roads within the country and within the 6th geopolitical zone in the country. And the security is backed by the full faith and credit worthiness of the Federal Government of Nigeria. And it is public offering, and it is listed on the floor of the Nigerian Stock Exchange and the FMDQ OTC. So if you want to sell or you want to buy, you can contact your agent, and the agent can go into NSC or FMDQ and see if it is available to buy. Although there is only few available at the moment because of only 3 issuances at the moment that are available. The Osun State is rounding up very soon by October. So it's only 3 people are buying and holding, but it is still expected to be tradable instrument according to the Sharia. Here we have a structure for us to understand easily. Federal Government of Nigeria wants to construct road, but they have issue on the budgeting. Therefore, they've decided to invite professional advisors for the advice, and the professional advisors advise that the Federal Government of Nigeria should go and incorporate an SPV, which is named FGN Road Sukuk Company 1 PLC. We decided to advise roads because it is only related to roads construction. And we also decided to advise for the company 1, thinking that when we are coming for roads, again, in the subsequent years, it is going to be company 2, company 3, company 4. But when we come to issue the second one, we realize that we don't need to go and incorporate another company 2, company 3. So we decided to use the same SPV that was used in 2017, 2018, and now 2020. Now this SPV, majority of the directors of the SPV are from the trustees and the solicitors, while minority are from the Federal Government of Nigeria. The sukuk holders will be relied upon because they will be the one that will provide the funding for the SPV to construct the roads that are identified. And of course, Federal Government of Nigeria is going to stand by and lease the roads that will be constructed by the SPV as a lessee. Therefore, the roads belong to the SPV, and FGN is just a lessee, is leasing it. And because it is FGN, they've decided to leave it open for the citizen to be using, while FGN will be paying the rentals as if it is from the citizen themselves. But we had a challenge because these routes based on the act of the Ministry of Works. It is only Ministry of Works that will touch or tampered with these rules. So we have to go into agency agreement between the FGN Road Sukuk Company 1 and SPV with the Ministry of Works and Housing, so that they can act as an agent of the SPV to construct and also to manage or to provide facility management until 7 years down the line, because it's one of the principles. The roads must be usable, must have the benefit for the lessee to continue using. So there must be maintenance that must continue until that 7 years down the line. Then, because of our way that we know the conventional bond, we don't want to change it. Central Bank of Nigeria is usually the paying agent, but trustees of the sukuk holders generally are also working with the CBN, are also working with the Federal Ministry of Works and Housing, so that they will make sure when the disbursement is going to be made, they will also have their input into it, or when the sukuk rentals is going to be paid to the sukuk investors, the trustees will also have their say into it. So CBN and the trustees are tagged together in there to do any activities. So here we started. The entire identifier routes, Federal Government of Nigeria provided legal document rights of the land to the SPV. So these identified routes are legally owned by the SPV. And therefore, from that period, then because it is routes that we want to do and the federal government wants to lease it after the construction, we did Ijara Mausufa Fil Dimma, which is forward lease agreement with the federal government of Nigeria to lease after the roads are constructed. And of course, the undertakings were also provided that the federal government of Nigeria hereby undertakes 7 years down the line, they are going to buy back the roads at the principal amount that is purchased unilaterally. Another undertaking unilaterally will be provided by the SPV that I will sell the assets, the roads to the federal government of Nigeria in 7 years' time, or in any other things that may provide the determination of the contracts. These documents were executed and were provided. Then the declaration of trust between the SPV and the sukuk holders were also provided. At this stage, necessary documentations related to the structures were also provided, were reviewed. And it is at this stage that the Financial Regulations Advisory Council of Experts of the Central Bank of Nigeria, that is the first, which is the Sharia board of the CBN that are monitoring all the Sharia activities in the country, are also reviewed.
Apologies, Malam. Apologies, Malam. You have 2 more minutes, sir.
So let me quickly round up. So this declaration of trust together with the other documents were also provided and reviewed by the first. And then here we have the issue was open and the investors invested and the allotment was provided. The construction and services agreement that I mentioned to you was just executed. And then the money was provided to the Ministry of Works and Housing, who will monitor the activities of the construction in line with the trustees that are providing the project managers, and then will deliver the routes to the SPV, and SPV will deliver it to the federal government in form of the lease that were agreed. Period down the line, the federal government of Nigeria will provide the rentals, and the rentals will be paid to the sukuk investors every 6 monthly. And then after 7 years down the line, these particular roads will be purchased and will be sold to the federal government of Nigeria, and the principal will be paid at that particular period. And these at least are the pictures of some of the roads that we have seen, beginning of the school and the end of the school road, that you can see in all the countries within some of the roads that are already provided. Because of the road, because of the time factor, we have other investment that also are there available, such as Islamic Fund, Islamic Real Estate, the Islamic shares, and the sukuk I mentioned to you. If you are investing in shares, you have to also do the qualitative and quantitative screening. You can't just buy because they are Sharia compliant products or companies. One, you have to make sure all the companies that are not permitted, you have to screen them out. The second screening, then you do the financial ratios. Financial ratios is you take the entire universe of the companies you want to, take the impermissible income screen, which is about anything higher than 5%, it fell. If it is more than that, if it is less than that, then it passed that stage, then you go to debt screening. Some companies may be Sharia compliant, but they may decide to go to the bank and maybe collect some loans that are interest bearing. If that loan has materiality up to 30% of their share of their market capitalization, then they fail. But if less than, then you take them to the next one. And from the next one, if they have money until you finish. So this is actually what you can do for you to invest in Islamic shares on the floor of the Nigerian Stock Exchange and other things. As we know, Islamic funds are also part of the instrument that you can, and I explained to you the relationship between FBNQuest and the investors that are going to do it in the Mudaraba structure that I'm provided to you. It can also be agency or musharaka, and some of the type of funds that may be available is Sharia equity funds dedicated to such as ETF, asset financing funds such as Musharaka and Mudaraba, that is leasing and partnership fund dedicated for only that. Then Sukuk funds, which we are seeing coming in the market at the moment, Sharia compliant ETF, as I mentioned, Islamic REITs, hybrid funds, and fund of funds, for instance. All these are things that we are all aware of. Benefit of investing in Islamic funds are active portfolio management, because you know that you may be passive investor, you can pass all your money or investment to the professional who will actively manage the portfolio and give you competitive returns. You will have regular income, because if they set 6 monthly, they will be paying you, then you will have it. And you already diversify your investment because you've given it to somebody else. And whenever you want to sell, you can always have liquidity by giving it back to the investment, to the fund manager, and the fund manager will buy it back and sell it to you. That is actually what I have at the moment because of the time factor. Thank you so much, everybody, for listening. Thank you, Ayo.
Thank you very much, Malam Ataru. And thank you everyone for listening. Please remember you can share your questions via the chat room. I'll be handing over to Tutu, who is the second speaker. Tutu Owolabi Kadiku will be speaking on the FBN Alal Fund, an open-ended fixed income mutual fund designed to meet the investment needs of investors seeking long-term income generation through Sharia compliant investments. Thank you very much, Tutu.
Hello, good afternoon, everyone. Thank you so much, Ayo. And thank you so much, Malam Ataru, for that detailed presentation. I think you will all agree with me that my work is really easy after that detailed presentation. So I guess we can start. As someone that is really passionate and highly driven by social impact, and I'm really pleased that we can actually introduce this particular fund into the market. FBNQuest Asset Management is a purpose-driven organization, and we're also very keen on impacting our environment partners and the community. So we're not just about maximizing profit, we also want to impact our community and environment as much as possible. Hence the launch of this FBN Halal Fund to sort of promote financial inclusion and diversify our product bouquet. So like I said, I'm sure all of you are sort of wondering whether this sort of fund is going to compete with the returns you're getting from conventional finance. Is it just dressed up conventional finance? Do we have Sharia compliant investors that are helping us to ensure that we're investing, Sharia advisors to ensure that we're investing in these funds, that we're investing in this particular fund? So I'll just start off and just go straight into the presentation. So I'll just ask you to please just give me 5 minutes of your time. I'll try and go through it as soon as possible. Yeah, so like we said before, the FBN Halal Fund is a Sharia compliant fund. It's an open-ended fund, and what that means is actually that you can actually go in and out of the fund. So it provides liquidity and accessibility to investors. It's a fund like that can be actually invested in only fixed income instruments. It's the fund regulated by the Securities and Exchange Commission. What that means is that we have to sort of align with the trust deed of the fund. And what the trust deed does is it ensures that funds are invested in the best interest of the unit holders. In addition to that, some of the other transparency measures we've implemented for this fund is to ensure that it has a custodian that ensures that the funds are actually held by the appropriate custodian, all the assets we buy into the portfolio. In addition to that as well, there's a trustee as well that ensures that the funds are invested, like I said earlier, in the benefit of the unit holders. We also have a very experienced and respected Sharia Advisory Council that ensures that we actually invest those funds in line with Islamic jurisprudence. So if there's any doubt around maybe we're not sort of investing in line with Islamic principles, I hope this has been corrected with that detailed presentation by Malam Ataru, because it's also one of the Sharia advisory advisors for this particular fund. Moving straight into it, so I've spoken about the governance policy around this fund. I'm going straight into sort of the assets that will most likely be investing in. And like we've actually seen from that particular presentation, it's a fixed income Sharia compliant funds. The value at risk for that particular portfolio or for this particular fund is very, very low, in that we'll be investing in fixed income sort of contract, like we've explained now, in terms of using the list, which is the JARA, or using sales contracts such as the Murabaha to gain exposure to asset, like Madam Ataru already alluded to. Leaving that, we're going to go straight into the other aspect of the presentation, which has to do with the benefits of the fund. Now, in terms of the benefits of the fund, normally you have the federal government of Nigeria, like Professor Ataru said, which comes to launch certain sukuks at least once or twice in a year. And after that, you really don't hear a lot from them. So what this fund will do is sort of provide accessibility to those sort of Sharia compliant investors, for anyone in the market that wants to invest in line with ethical principles. And like we've also said, this fund is really not only Muslims, it's for investors that are looking to maximize return. And this fund can also compete with returns that you can currently earn from conventional finance. Other benefits of the fund include diversification, because it's going to be actively managed by experienced fund managers and a well-respected Sharia advisory council from Nigeria and from Malaysia. Will be able to maximize return to all our unit holders in the fund. Additionally, it also provides regular income. So whether you're actually saving towards Hajj or you're saving towards meeting a particular objective, this particular fund is well suited to you. In terms of the time horizon for the fund's time horizon is between 3 and 5 years, although you're allowed to actually take from your fund anytime you have liquidity needs. In terms of the duration of the portfolio, we expect to invest the assets in the duration of the portfolio not to be too long to reduce the volatility or impact of the assets we have in the portfolio on the unit holders. And like I said earlier, if you think that we're not going to meet returns or match the returns of conventional finance, I think you should think again, because we're most likely going to compete as much as we can with what you can get with conventional finance by providing competitive returns to all the unit holders invested in the fund. So that is it in terms of the benefits of the fund. Yes, we are going to compete with what you can get from conventional finance. Yes, it's going to be regulated by the Securities and Exchange Commission, and it has respected Sharia Advisory Council and experienced fund manager to ensure that we're able to compete with other Sharia compliant funds out there in the market and also maximize returns to our unit holders. The next slide just sort of explains the performance of the fund. Like I said before, we're here to sort of give you as much information as we can on the fund. FBNQuest is very big on transparency. So on a monthly basis, you will get a fact sheet telling you how we've allocated the assets we have in the portfolio, what sort of returns you've earned, and what sort of distribution we tend to pay the unit holders. This slide just shows you a little bit about the time horizon that I've explained earlier, minimum investment level. So because we're trying to promote financial inclusion with this particular fund, is at least 5,000 Naira, you can actually get exposure to the assets in this particular portfolio. It has a minimum holding period of 90 days for this particular fund. So we would expect investors to sort of leave their funds in there or sort of gain returns before they inform the portfolio. The management fee for the fund is about 1.5%. And we'll also have to pay some of our custodians fee as well. But at the end of the day, I can say that the fund will be managed in the best interest of the unit holders, and the trust it will be complied with. The fund will also be audited by the Sharia Advisory Council to ensure that we're in compliance with Islamic jurisprudence. So that is it in terms of the fund. As at the 28th of July, please can we go to the next slide, please? Yes, as at the 28th of July 2020, the fund has actually returned 7.85%, and that is net fees. So if you compare the return that any investor that put money in this particular fund at the beginning of when it was launched, you can see that the client has actually earned a good rate of return at 7.85%, and sort of backs my point that I started with by saying that the fund can actually compete with what you're getting with conventional finance when you compare what treasury bills are sort of giving you in the market for this sort of instrument. So that is it for me. Not a lot to say from my end. It's just to introduce the FBN Halal Fund, an investment vehicle for you to gain access to Sharia compliant investments, enable you to also diversify your portfolio from an ethical perspective, and sort of encourage people out there to sort of look at it from the fact that it's just a Muslim only fund. I hope we've been able to demystify that with the presentation that Malam Hatairu has wonderfully done. And I hope that we'll see a lot of investors gravitating to this particular fund. So thank you so much for your time. And I think the floor is sort of open for questions now. That is it for me. Thank you so much for listening.
Thank you, Tutu. Thank
you,
you
Ayo.
everyone for listening. And I hope this session was as impactful as it was for me. Thank you, Malam Mataru. Please, we have some questions in the chat room, and I'll be reading out the questions for Tutu and Malam Mataru to answer. The first question is, how do I benefit from non-interest finance as a Christian? Does it mean I can take loan with no interest attached? I think I'll hand this over to Malam Mataru to answer.
Thank you so much. Now, it is not that you can take a loan with non-interest. That is, of course, the name. But what is interest, as I explained, is for a bank to give you cash and you pay cash back. That is not the model the non-interest bank does. What they do is they do trading. And that is why I also mentioned to you that God has permitted trading and forbidden interest. Now, what trading are they going to do? If you are interested in a vehicle, they can go and buy that vehicle and they can sell that vehicle to you at a cost plus the profit margin. Now, meaning even if you have it, you are going to pay certain considerations which might be actually above the consideration of the car because of the trading segment of it. So yes, even as a Christian, as I mentioned, and as I try as much as possible to demystify it, the issue of Islamic finance for only Muslim. Islamic finance is just the nomenclature that is recognized globally because Muslims are expected, or at least are all strong in trying to follow their respective religion. But we have already seen also as well in other Abrahamic religions such as the Christianity and Judaism that similar prohibitions in Islamic finance are also prohibited in the Old Testament and some of the New Testament. So meaning Islamic finance is also for the Christian. And I also explained to you that when Jaiz Bank opened their doors, some of the first transactions they've done were actually done with the non-Muslim customers. And of course, when Jaiz also came on board, there are a lot of investors that invested in shares of Jaiz Bank non-Muslims. So it is not only for Muslim, rather it is global and it is based on the commercial aspect that you're supposed to see it. Yes, please, you can contact any of the financial institutions that is providing services of Islamic finance. Thank you.
Thank you, Malam. So I'll ask one more question because of time. The next question is, returns is an incentive to investment. How profitable is ethical compared to conventional? Tutu, please, can you take that?
Hello? Yes, so from my understanding, ethical and Islamic finance, for me, it's like a step above ethical finance because there are certain criteria we look at when we're investing from an Islamic perspective in terms of how live the company is, and certain other criteria that are not included when you are screening a particular stock or investment for Sharia compliance. So from that angle, although they sort of follow the same trajectory, my understanding is Sharia takes it a step further, ensuring that it complies with other sort of screening criteria. So that's really the difference from my own angle. But my advisor, which is Mataru, can also shed more light on that as well. So that's my understanding, Ayo. Thank you.
Okay, thank you.
Thank you so much, Tutu. Now, just my contribution related to that. I remember that in 2009 down to 2012, I managed an index, which I did while I was working with another entity, Lotus Capital. And that index, I took companies that were trading on the floor of the Nigerian Stock Exchange. I screened them in line with the screening criteria that I explained to you briefly. And I took 15 companies out of the universe of 20 that out of the 20 companies. And in that index, I realized that The first year, 2009 to 2010, that particular index was providing 34% as return on investment, whereas all shares index of the Nigerian Stock Exchange was providing 19%. So with respect to that, you can see that the ethical investment or the Islamic finance investment is also so much profitable, and it is resilient to some of the abstract things that we are seeing in the advanced financial sectors, for instance. It doesn't have risk. So as a result of that, that is why the bond investors are also rushing to invest in any instruments related to non-interest finance. So it is profitable and even may also be more than conventional financing in terms of the profitability. Thank you so much.
Thank you, Malam. So one more question. Can I use investment funds like the FBN Alal Fund to establish a halal portfolio for my children, nieces and nephews?
Oh, yes, you can. And that's what we're looking to achieve from this particular webinar, just to try and demystify Islamic finance and encourage people to sort of invest in Sharia compliant fund. So yes, you can. And like Malam has already said, at the moment as well, the fund is actually doing 7.65%. If you compare that to what you're getting in the Treasury bills market or the 364-day T-books, for example, that did 3.4%, you can see that there's a pickup of about 300 basis points if you actually invested in the fund. So yes, you can do that. We have enough relationship managers and a good customer experience for all our clients to ensure that you are treated in a very impactful way for all the things that you've asked for from all our clients, and ensure that you get weekly statements. We ensure that the experience is really grand when it comes to FBNQuest. So yes, the answer to that question again is yes. Yes, you can.
Thank you very much, Tutu. And thank you everyone for joining. As you heard, the fund is open for yourself, for your children, for your family. You can invest for everyone. And it's not limited to just Muslims. It is for everyone. Thanks once again for joining. And please look out for more information on our next webinar on our social media channels at FBNQuest on Instagram, Twitter, LinkedIn. Thank you for joining everyone on this edition of Conversations with FBNQuest, which focused on ethical investments. We hope you found it very informative, and we look forward to engaging with you for further to take advantage of the opportunities we have shown you. We have several more insights and relevant topics planned in the coming weeks. Please stay tuned. And like I said, please follow us on our social media platform, Twitter, Facebook, Instagram, and LinkedIn at FBNQuest today, so you don't miss out. If you have any immediate questions or need any support, please send an email to webinars@fbnquest.com. We wish you a safe and productive day ahead. Thank you all. Have a good day.
Thank you, Ayo. Thank you, Malam. Thank you so much. Thank you very much.
Thank you so
Bye.
much, everybody.